It's an arms race between AI doing better and better fraud and the traditional system trying to match that rhythm and try to assess identity and eligibility in real time.
Hi everyone, and welcome to The Future of Finance is Open. I'm Ian Horn, and today we're going to be talking about trust as a currency and solving the digital identity crisis. As ever, I'm joined by Aranjay Katakam, who of course is the author of The Future of Finance is Open. Aranjay, good to see you again, man. How's it going?
Yeah, it's going really good. I think like spring, there's something about the sunlight. It just brings a new energy. And yeah, I'm looking forward to so much change that's taking place. I mean, it seems so rapid and it's a lot of energy.
Absolutely. And it also means that due to my ineffectual blinds in the room that I'm in right now, you might start seeing sunlight on my face, which is quite novel for an Englishman. But it is a slight issue that I've been dealing with recently. Anyway, we're here to talk about something far more interesting than that. And we've got Melody Lamarque joining the podcast. So, Aranjay, could you talk us through why you've invited Melody today?
Yeah, absolutely. So, Melody, thank you so much for joining. It's really cool to have you here. And I remember, having this conversation with you at the end of Cyboss, and we sat down for 45 minutes, deep into identity, when everyone else was drinking champagne and, like packing up to go home. There was this connection there. And I think, just understanding in that short time how committed you were to solving this really sort of stayed with me, and I'm just delighted to have you on.
Yeah, thanks for having me, guys.
Yeah, well, let's talk about your journey, right? So you're currently with Fireblocks, but before that you co-founded the Keyring network. We need to talk about that, but before that even you were handling traditional kind of M&A activity and digital investment banking at JP Morgan. So what was the catalyst for you that made you leave the TradFi world, if we can call it that, in 2022 to co-found Keyring?
Actually, it started much earlier. It started back in 2015, and the journey involves one of your previous interviewees, Christian Catalini. He was actually my thesis advisor back at MIT, where I wrote my thesis, not really a thesis, more a paper at the time on blockchain. It was very early. I fell in love with the technology. I thought this is going to revolutionize finance and money movement. Really loved it. But then, started to have a little bit of an imposter syndrome. I was quite young. I thought, let's go into traditional finance, see how it's done, and try to see from there how you then want to change it. So that's how I got into crypto, then did, as you said, like JP Morgan, slightly made my way into more technical product things back at JPM. So started in Paris in M&A, like you said, and then moved to New York, working on the digital asset side of things, touching a little bit on digital assets at the time as well. Then moved into venture capital in London for a year and a half. And then, seeing all these entrepreneurs, all these new projects being built, I woke up every day thinking, okay, this is the thing that I've been wanting to do for years. Let's just go ahead and do it. And then I met my co-founder, Alex, at Keyring and thought, this is a very hard problem to solve. How are we going to do in a world where we're dealing with addresses, we don't know who's behind, there's no Swift, there's no equivalent messaging system that everyone uses. How are we going to solve this for the industry to scale? And so that's why I decided to jump into it.
Let's go over this because we've got quite an informed audience. You mentioned Alex McFarlane. I've spoken with him before a few times as well. But for those that aren't familiar, the Keyring network, what was the problem that you were trying to solve?
Look, the problem was always the same, which is how can we find a way to verify the identity of the user or the company behind a wallet address without putting risky information on chain? I think that was the purpose, and it's something everyone's struggling with. But obviously, you're a startup, so you can't really start by saying, we're going to create this protocol, this standard that everyone should adopt, because that way it will solve it for everyone, right? This is the classic issue. So we actually were fortunate enough, both of us, to have a network in traditional finance, and so got to talk to many players in this space to try to understand what the problem was. And timing was horrible. It was 2022 and then, 2023. I'm not going to go into that, but
Yeah.
we got to learn many things about what were the issues, how to solve it. And we were sometimes, working on things that were not super core to our business. So we ended up looking at, okay, how can we do reusable KYC or KYB? How can we do whitelist orchestration at scale? Trying to find, what was the product that would actually be the first entry point into this big problem that we were trying to solve. We ended up working on a niche, which was how do we let institutions touch the riskiest part of blockchain, which is DeFi, in a way that feels safe and secure enough that they can try to do it. And we did that with the use of zero-knowledge credentials in a way that was fairly novel because it also leverages another piece of tech, which is called ZK TLS. It's basically a way for users, anyone, to extract verifiable credentials and proof of KYC, proof of identity from your verified existing sources, like your bank account, your Coinbase account. Take that, package it into a proof, and attach it to a non-custodial wallet, which means it was the first scalable way that you could have a permission pool, in DeFi, have players coming from anywhere. No one needed to know where they were from or have a central gatekeeper. And institutions coming in knew that all these participants had been KYC'd in one of the sources.
Yeah. And I want one more question on the whole TradFi DeFi thing. Because, actually, JP Morgan, I don't want to categorize them as being some kind of stuck in the mud institution because obviously they had Onyx, Connexus now. So it's not like they're not looking at this space or very active in this space. But what was it about, going it alone and looking more of a DeFi angle that you had to do? So if you're founding Keyring, I think what I'm trying to say is why couldn't you have done that with an institution?
Well, first of all, I think if you want to solve the problem in a way that's really new and you want to make sure it becomes a standard or it becomes adopted, it's really hard to do it from one institution that typically is going to do it for their network, right? But I think if you want to have full flexibility to explore and to build with multiple institutions and to test, it's easier to do it on your own. And if you think about these institutions like JP Morgan, for instance, I agree with you. I think they're doing a ton, but they're starting on their number one pain point, which they should. So it's going to be wholesale. It's going to be transfers that they want to optimize. And so typically that doesn't need to be that open at the beginning, and frankly, the reason was it was less interesting to me as a problem to solve.
Yeah, fascinating. I think one of the questions that came to mind is like, why you were doing those early interviews with sort of TradFi. What was the biggest misconception that these traditional financial institutions had when you first started pitching them?
Yeah, I think it's less about, so obviously there was education at the time about what was possible, but ultimately I don't think the tooling has ever been the issue in crypto. We've built tools, we've built magnificent tools, complex tools, but the issue was regulation. There was no clarity on what they could do. So some institutions, I think, went the full DeFi way, not really regulated. Okay, we're going to touch it. We're going to do everything we wanted with it, or you don't really do it. But the middle path in which it was, you can be regulated and you can do this in a way that's secure. The reason why didn't really press on it was because there was no regulatory clarity, and therefore the risk for them was too big.
Yeah. So go ahead.
I was going to say, maybe adding one thing, which has always been interesting to me, is they were fascinating with the concept of zero knowledge. It seems great. Everyone's talking about it. So there was a little bit of FOMO, which, to be honest, benefited us because we did obviously have that in the tech stack. And ZK is great for certain purposes, but it doesn't solve for everything. And sometimes I would even dare to say that it's useless. For instance, the way we did it was, okay, we need to have a way to completely dissociate the identity in the real world with the wallet address, which makes sense at scale. You don't have a honeypot, but if you're doing experimentation with trusted partners at a small scale, doesn't really bring much.
Got you. And so your current role now, after building Keyring, you become the Senior Director of Digital Identity at Fireblocks. And that's late 2025. So still quite a new role for you, right? So why was Fireblocks the right place for you to scale your vision of institutional, on-chain identity?
Yeah, great question. The role has just been changed to VP, Identity and Compliance.
Okay. Congrats, I assume.
Whatever. But no, look, the story with Keyring is that, so we found this niche, and ultimately I think the DeFi angle was very interesting, and how do we scale that with lots of additional things? That's what Alex is still doing with Keyring. And then The whole infra piece, identity primitives, basically, which was deep infra, something that needed distribution, massive distribution, was still an issue. And so we met Fireblocks over a period of time. And in the end, it's something that they've always been interested about. There's the Ave Arc history back in 2022, I think. And so they had this huge vision, which I shared. And then we started conversations. And I thought, let me try to think about this problem in a different way. I'm not a startup anymore. If I'm at Fireblocks and we have all these clients and that reach, how can I take this problem and try to solve it in a way that would work this time? And that's why I was so excited to join, because I think, if you're going to address something like this that touches on security, on infrastructure, there's no better place to do it than someone like Fireblocks.
Yeah.
I was just going to say that's fascinating because you found basically between the startup and JPM, you found something in the middle, which doesn't have all the bureaucracy and the weight, but also has some of the scale and resources to actually.
It's true. And so, yes, there's the reach and the resources. One thing that I love as well is not having all the admin that you have in a startup. So that also frees up a lot of time to actually think, meet interesting people. And, it takes you to a different level of performance, I think.
Yeah, I was going to touch upon something that's come up in a few of our podcasts, actually, which is also the trust, because most of my career has been around institutional events, and Fireblocks have become quite a recognizable part of the fintech scene and the banking scene over the last few years. So I'm assuming it helps that people, especially when you're dealing with something like risk, that people know who you are and who they're dealing with, right?
Yeah, it really helps, especially if you're trying to solve a problem that everyone has, and therefore trying to do it in a way that is open source even, because it opens doors, it brings credibility, I agree. And it's also, in a way, a neutral player in the space, because Fireblocks is providing primarily infrastructure, right? It doesn't have a lot of packaged verticals on top like certain players do. And therefore, I think it's a privileged position, not only to be in the room, but also to get people that are typically never in the same room to actually talk to each other.
I think of that as herding cats, though. So it's not easy.
I'm not going to lie, it's still a challenge. And, that's what I love about it as well. It hasn't been solved. It's not because you're in one of the biggest companies that everything magically becomes,
Yep.
easy. It's easier, but the problem's still there. And look, I hope that we can have this conversation again in a few months. And hopefully there will be some proof points that start showing, what we've done.
So you wanted to just jump into this, the actual digital identity, right? The current models largely built on big tech's single sign-on is facing a crisis of authenticity due to AI bots and Sybil attacks. Why do you believe like anchoring identity to something immutable and decentralized is the next sort of layer of the internet?
Very interesting question, because I think you're touching on what I would call the frontier. And I think there are two parts to it. There's that frontier of where is it going and how do we think about digital identity, securing and powering the future of payments and money movement. That includes agentic topics. But I think before getting into that, there's a part that is bigger and hasn't been solved either, which is linked to how do we simply perform identification and identity information exchange in a way that simply works. And that, is the case for payments, for very basic transfers on chain. That world today is complicated. Solutions are very fragmented. And to me, that feels like the first problem to solve before we go to the frontier. What I mean by that is, look, let's say you're, a fintech, let's say you're Nubank or Revolut. Your user wants to interact with the outside world and send a transfer. Today, you have a very limited number of tools or solutions that you can pull in order to know the counterparty behind it and then do that, secure communication and then exchange of messages. That is something that I think needs to be solved first for, the entire industry to be able to scale. And then we can think about the next frontier and how do we start reducing intermediaries potentially, which was one of the first, premises of crypto, and have more of these actors interact directly with the network.
So I agree. I think that part of identity is just sort of fundamental. I think when you think about the FIDO Alliance and passkeys, and it's still abstraction. we are only validating that this device is the right device. It's not actually going back to the person. So there's a gap, like for sure we need to really get to the bottom of who the ultimate beneficiary owner is, in a transaction, because this is just a proxy to that.
I completely agree. And that is why let's say the infrastructure type that I'm referencing is something a bit more traditional for now. Look, the way I think about it is that you're correct. You need to interact with a counterparty that you can identify, and then the counterparty will be able to pull the information related to the end user and transmit it to you. Here, I'm talking about the classic case of custodian to custodian transfers, right? You have a financial intermediary between. It works similarly to SWIFT. They establish a communication, they securely exchange the information. And I think that is the first piece that's needed. And that's how you get down to the individual owner and are able to exchange the information, which is what I think is step one. If you go into something that is a little bit more decentralized and start to think about me as a user with my MetaMask wallet, trying to interact with one of these players, to me, that's the next frontier. How do you then attach an identity to that in a way that is secure, complicated? I think there are plenty of solutions. And the reason why it hasn't really been solved at scale today, I think, is because it's not the first problem. And so if I go back to the keyring experience, if I had to summarize it, the reason why VCs or digital identity didn't really take off in DeFi at the time is because no one cared. You're either a regulated player, and therefore anyone that interacts with your product, you need to fully verify. Like you said, Arunjay, you need to see the actual detailed information about the user so you can sanction screen them and assess eligibility. Or you're not regulated, in which case, why would you add friction in the mix, right?
I'd like to pick up on something else you said, which is the disintermediation part. I mean, journalistically, it's always really fun to pick out things where people will lose their jobs or businesses will go out of business, right? But I am interested to know which parts you think will be disintermediated most profoundly, especially because when it comes to identity and fraud, that's an area that constantly evolves. Threats evolve, challenges evolve, even something like AI. You look at what that does to biometrics and other areas, it becomes harder and harder to prove someone's identity. So where do you see disintermediation happening? And where do you think there's still going to be a rich environment for intermediaries to actually offer something different?
I think there are two elements, the problem of fraud and identity and who ultimately gets to verify it. I think you're right, obviously, Ian, it's become even more of an issue today. It's an arms race between AI doing better and better fraud, basically, and the traditional system trying to match that rhythm and try to assess identity and eligibility in real time. The thing is, it costs a lot of money if you think about it. So if I think about the regulated world today and the requirements that financial institutions have to know their customer or their businesses, it costs a lot of money if you actually want to do it right. So the way they do it is they might use, third-party providers, which are becoming obviously increasingly competent in terms of fighting these hacks or fraud systems. But I think in this arms race, the larger the player, the more sophisticated, the more money they put behind it, basically, and connections to the right systems, the better the identity proof will be. Therefore, that might actually be a good incentive for more of the compliance requirements and liability to be put on these very big players like the banks, the big banks, and for smaller players to maybe have lighter requirements by being able to rely on these big players, because honestly, they don't have the means to fight it. There will be better means, tools like we can have, like we said, biometrics, cryptographic signatures, time-bound tokens, etc. We have many of these solutions, but I think ultimately it's a question of money that you put behind it. Anyway, so that's on question one, how I think the roles will evolve in order to be able to verify and attest to identity. Now, the second element which you mentioned, which is disintermediation and direct access to finance, hopefully it will be a thing. For that, look, I think there are plenty of tools, but one that is related to number one, I think, is the gradual acceptance of reliance. What I described was just KYC reliance in a way from regulators. So accepting proof of KYC, potentially zero knowledge proof of KYC at a bigger scale in order to ease access to financial instruments, to more companies, to more individuals, that I think is going to be quite interesting. But if I go a step beyond, putting that sort of part aside, ultimately it opens up direct access to players that didn't have it before. Think about merchants that can start accepting payments directly. They could have a proof of KYC from the guys paying in. They don't need to have a whole PSP that they're going to pay or verification stack that they're going to have to sustain and be liable for. Creators as well, one level even closer to the individual could start to do it without paying fees. Individuals, like remittances, is a use case that we talk about a lot as well. And I think if we put the right framework around it in terms of potentially signals, so proof of KYC, plus maybe, something that you're building at PAS, I know, but, a link to the government issued digital identity in a way that's, you could query it if needed, but otherwise it's just a secure indication that you are indeed an individual in this country above what age. I think these frameworks will really ease access to finance, and this is how we potentially start to be more and more disintermediated.
Yeah, we're definitely going to get onto the digital identity question in a second. Aaron J, was there anything else you wanted to ask before we do that?
We talked a lot about zero knowledge proof, and it's going to be a while before FATF get okay with accepting that. But in the meantime, sort of the selective transparency, where you have private accountability, and it's this sort of finally moving us past the old polarized debate of either total digital anonymity or total financial surveillance. Do you see this as somewhat of a middle ground?
Look, I think it's a tool in our toolbox. It can be a good tool for certain use cases, such as needed to prove something to the most basic, right? It depends on what is required for the activity in question. So if you're going to do a very low amount, low risk payment that you would do in cash, for instance, you don't need much. You should not need much, right? So in that case, again, depending on the actual use case, select reveal zero knowledge proof of something 100%. But then again, it really depends on the use case. And like you said, it's going to be a while before certain things like this can be accepted for types of instruments or use cases that are way more regulated. So yes and no, depending on the use case.
Yeah.
Well, actually, Melody, I want to push you there a little bit because I think you got off too easy. So I agree, of course, like today with cash, there's no track or trail of cash, but the gap to when you take it digital is overburdening, so for years, there's been this argument, especially for financial inclusion, that having tiered KYC, simplified due diligence and scaling it up with a ladder based on transactions and transaction values gives access to people who otherwise can't meet all of those things, and also some insight into what's actually happening, which today in cash is invisible. How do you think about these frameworks? So we've just been through recommendation 16. Personally, not much changed. In fact, it was sort of going in the wrong direction from a financial inclusive point of view because there was more requirements and more burdens on ultimately the small institutions, but on the end user who didn't have those pieces of data and information. So how do you see this gap actually bridging?
Okay, if we're thinking about the financial inclusivity and let's be very precise, you're talking about people that want to store value, for instance, exchange value, potentially even have access to credit, and have no way of verifying their identity, have no way of being banked.
Assume they have some level of identity. Say they're on mobile money.
Okay.
But it's not like two forms of ID and address proof. It's a more simpler thing, one form of ID, something that anchors them, but not the whole shebang as is expected in for like bigger financial institutions.
Yeah, for that, I think crypto can be really helpful. Obviously, what you described with the tiered requirements in terms of what should people have to prove if they want to access certain levels of, financial products is a very good, I think, way to go. But it's also a way to start building proof of reputation. It's also a way to start building a credit score to prove your financial history in a way that is verifiable, which I think brings a lot of value. And it's slightly different to obviously identity, but also can be used to store certain elements of proof about yourself. So for that, I think it's a wonderful tool. And In a way, I hope it's moving in the right way, right? Because these use cases that you're mentioning, to me, feel like the ones that have gained the most by using crypto rails. If doing stablecoin payments between the US and Europe, that is not something where we have a lot of benefits. Today, we know that. But in these corridors, in these instances where it could meaningfully change the economical landscape of a country and, populations, I think this is tremendous, obviously.
Absolutely. No.
Great. Aaron J looks satisfied now. So
moving on,
I think you've made it, Melody. Onto the digital ID point that you made, because that's hugely topical, actually. And strangely, well, I say strangely, it's a more emotive topic than I think a lot of people would expect it to be. As you were touching upon, Europe's got this mandate for a digital identity wallet, which rolls out, I think this year, if I'm not mistaken, and gives people cross-border control over their authentic. So how does this regulatory push alongside the MiCA framework give institutions the confidence to move from exploration into full implementation?
Look, this framework I think is great because it helps remove some of the burden from the individual and simplify a lot of the processes. It's going to be mandatory on the retail side, I think, by end of 2027. And it's going to help for onboarding. It's going to help against fraud because that helps regular authentication proofs. But at this time, at least, it remains within the purview of banks, right? Or regulated licensed players are going to be using this to do many things. Of course, as an individual, I will have these credentials in my wallet and be able to do certain things with it. But how do we then, on the individual side, use these credentials to tie them into non-custodial wallets or other things and make that useful? I think is not something that is going to happen very, very soon. And I'm saying this in terms of where we should focus our efforts, at least for us, because I've had the very bad habit of being too early in thinking about these things. But I think it's going to be good. I think it's moving in the same direction that many countries that have issued their own version of a government digital identity. The main benefits, though, I think, are coming slightly later. I don't know what you guys think about this because obviously, RNJ, you're very close to this topic and you've seen maybe how it moved certain use cases in other countries that might be different.
Yeah, no, absolutely. I think, India, Brazil, Singapore are the big ones that come to mind immediately. So for me, I still have doubt about the EU initiative because it's so many different countries, so many different agendas, like everyone wants to implement it slightly differently. So it's almost like, it's not the same when, one country is trying to do it. So I think there's that. But what we've seen, at least from is probably ahead of everyone at the moment, because what they're now allowing is for you to abstract the identity and create credentials that are not, that are connected, but equally also separate, which I haven't seen in any other market. I find that fascinating. So they've gone through the whole arc of using it like India and Brazil and others have of, for your basic, all your KYC requirements. But then the flip side to that is like today, if I check into a hotel and I show them my passport, my government does not know that I was in that hotel. But like with the Aadhaar, if I use that to, check in anywhere or, validate it, it's going back to, the centralized source for validation. And then it collect that metadata, like who requested the ID, which day, when, location. They have all of that. And so suddenly it really goes towards a surveillance state. Whereas if you can abstract it from, and you can do a sort of offline verification or, verification from within the identity that I present, I feel like that could preserve like an individual's privacy, but also, prove that I am who I say I am.
Yeah, I think this is where it's going, right? With the ability to store it locally on your phone,
Yep.
have the right signature. The signature is always verifiable against, a directory of,
Yep.
who is authorized to issue it and what's their signature. So you could always do that. But I think this is a key requirement. And I love your mentioning of Brazil because I think that's an incredible example of something that's been massively successful. the PIX model I'm referring to, but interestingly, it's fairly centralized, as we know. And the way this works is that they pushed all the banks in the country to adopt it. And so there was even a little bit of a fight because individuals were able to choose which bank or which banking partner they wanted their primary identifier, so your tax ID, if you will, to be associated with. By default, that would become your default account. And then you could also use other identifiers like your email address to other accounts. So in that sense, the alias, I would say, mapping is still somewhat centralized. And there were actually issues with, hacks and ability to look into financial activity of many individuals. But at the same time, the adoption and the success of it was absolutely incredible.
I think it's fascinating because each time someone does this, I think Brazil is a great case because they studied everybody. They figured out what the secrets of each one's success and failures, They came to the UK, they looked at PM, they looked at why it didn't work as well. And then they took all of that. So the end result was that it just took off. And I think some countries are still stuck in this we'll build it and they'll come mentality, which is really kind of outdated. Like it's going to happen, it takes time and all. But actually, if you get it right, I think what Brazil showed is that, there's there are probably like half a dozen things you absolutely need to do right. And if you do that, then it can just take off.
Yeah, I mean, the only thing I'll add is to go back on that point around selling it publicly to people, because as you were saying, Aaron J, you got different nations within Europe with EU identity, different trust across regions, different implementation methods. And even if you did have a fairly uniform method for rolling this out, I still think that the public that uses it might not have trust in that. And that can be a barrier you've got to jump through. I mean, the other thing is you look at the UK perception of the EU ID card. There's a lot of fear and concern around it. It kind of echoes what we've seen around CBDCs. So these things can feel inevitable, but they do seem to fit into a certain kind of pushback that you see in certain societies. So it'll be interesting to see where it goes. On the other hand, a lot of the financial inclusion tools that I'm seeing now are finding ways to verify people's identity and bring people into the banking system. So these sorts of developments can be quite encouraging from that perspective. But those initiatives are happening without being the government-led as well. So it'll be interesting to see what people prefer. So I think that's the thing that stands out to me.
I would add one thing, which is if you think of it as a stack, right? And potentially governments and other public organizations might be building one piece of the stack, which is honestly what we expect them to do, which is attest to the identity of the individuals in their countries. But then think of all the pieces that can be added on top. And that's where I really trust our industry to build the right tooling, because you may have this piece of identity that in and out of itself is not very much privacy preserving, can lead to mass surveillance if misused, and has a lot of fundamental issues, but has a lot of benefits as well, right? To combat fraud, etc. So if we build the right pieces on top, the right level of aggregation, anonymization, and going back again to the tiered idea as well, we build the right frameworks on what's actually necessary to do in one or two use cases with the right stack on top. I think it's tremendously helpful.
So now we're going to look at the future. So it's 2032, and we're going to make some predictions. A major theme of the book is that we're moving towards less human intervention in regulatory compliance with all of AI. Once we build all of these building blocks and have this strong framework here. So how close are we to an AI-driven financial graph that instantly verifies counterparties without that human compliance officer having to review the documents and verify the transaction?
I think we're close. I think AI and agents in general can be used in two purposes there. One is, as you said, do the right collection of information and apply verification, hopefully of digitally signed credentials, and call the data sources as needed to perform this activity and do it in the right way. That's one. I think we're very close. If not fully automated without a human in the loop, at least 99%, and then potentially humans for certain use cases, which, by the way, is already the way without AI, or a little bit of AI in a lot of KYC cases that are fairly simple. The other piece that actually I think is interesting is if I look at how I think about blockchains in the crypto world in 5 years, hopefully we have solved this basic need for counterparty discovery and communication at scale. So not just like institution to institution, but also non-custodial wallets to institution in order to share the right information. And if that happens, then I think there's also a path in which in 5 years, we see agentic economy actually taken off. It's already started, but we've seen things and proof points already. There is a huge chunk, I think, of identity and authorization layer that is missing. Lots of people are working on it. Protocols are, fighting a little bit at the moment to try to see which one will win. But ultimately, I think as long as it's built fundamentally on standards that are open, that everyone can build on top, like we said, there is also a world in which agents are able to perform in a verifiable way many financial activities on behalf of the users or companies behind it. And that is another way, I think, to think about identity and compliance, because the agent itself will inherit some of the compliance attributes that their owners have in a way.
Yeah, I think of this as know your agent, KYA. So we have KYB, we have KYC, and I also think of KYD as know your device. I think one of the things I think about is in all of this innovation, when the correspondents are going, we're just basically collapsing all of this. The margins is what's going to reduce, right? We're going to get to razor thin margins, and there's going to be so much efficiency in the industry.
Yeah, actually, this is a very good point. Going back to this 5-year plan, if we have indeed solved many of these core issues in a way that is open and therefore interoperable, it means that one of the big moats, or let's say captive items that these big institutions have with KYC is that they've done it. And so because you were KYC with this institution and you can't reuse it anywhere else, this is your world. This is your financial ecosystem. Without that, with the more open aspect, which I think, is being pushed by all the initiatives we mentioned on this call, it means that all these institutions will have to compete on another level, on, additional benefits or offerings. And this is potentially where the benefits of having an open model should, because of the additional revenue and things that it brings, should overcome, what they may potentially lose in terms of clients being captive.
But I guess I'll ask it more explicitly, which is, if ID does become, digital ID that is, becomes truly portable and user controlled by 2032, what does happen to those traditional, banking gatekeepers who did monetize that trust? Do they, like you said, you suggest they move on to something else, perhaps, essentially saying that whole layer of revenue gets stripped or at least cut down?
Actually, I think the opposite. I think today it's not an area of revenue. It's a sunk cost, it's a liability, but the value that they gain from it is they hold their customers captive. I actually think we flip the story on that and we turn it into a revenue center. Why? Because going back to the premise of this conversation, even if digital ID is, something that exists and is portable, the actual party that is able to verify it, but not just verify that, you're not on sanction list, but also verify potentially your financial activity, whether or not there's risk associated to you. All these extra layers that are needed, I think these institutions are going to keep this role. And in a way, we potentially need them to. And they're going to be able to turn that into a revenue center.
Fascinating. Yeah, actually, I didn't think about that. That could be, they still have to compete in that because they lose the stickiness. But if they can give enough value to keep the customer for the positive reasons, then actually that could be really profitable for them. Yeah,
I think so.
So in a future where every corporation and individual operates through a wallet rather than a bank account, what is the most profound change we will see in how global value is exchanged?
Great, difficult question. I think part of it is linked to the premise of crypto, meaning it's going to be easier, cheaper, instant. There are going to be less barriers in order to be able to do it, obviously. And I think it's hard to answer that question without thinking about AI as well, because we're talking about the future and potentially, things are going to be extremely different a year or two from now. And, there's a big part of that change that I think will be powered by crypto rails in terms of, money movement, because it's a good way to do it for that world. But I think these futures will be intertwined, and the wallet is a perfect representation of what agents are going to be able to use as well. Hopefully, with all of these tools and the ability for more individuals, smaller companies, and everyone to participate to the financial system, and with AI as well, level the playing field in terms of what they're able to access, I hope that it's also a way for many more players, individuals, smaller companies everywhere in the world, not just in some of the countries that we know, are able to be successful and build meaningful, success stories around their product or their offering.
Amazing. Really fascinating stuff, and a good bit of future gazing for us there. I think we've looked at the future of identity, but also the future of identity in a kind of agentic world, which I think is a particularly interesting point. I think that's all we have time for, but Aaron J., any final points you want to raise or any final questions for Melody?
I think this was just fascinating. Thank you so much, Melody. This is really, I'm going to listen to this again, like just to unpick some of this. There's some golden nuggets in here, like that I hadn't actually previously thought of. And so it was really fascinating. Thank you. Thank you so much.
Oh, absolutely. I'm going to second that. And Melody, anyone that answers questions before we get to ask them usually is giving us some great insight. So thank you so much for joining us. And for everyone listening in, this has been The Future of Finance is Open. I'm Ian Horn. Aaron J. Katakam has been hosting with me. Melody Lamarque, thank you so much for joining.
Thank you.